From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Kaylee Lyons. President Trump floats possible tariff exemptions for auto parts, even as he warns a reprieve for consumer electronics will be short-lived, and the U.S. starts a formal Section 232 probe into semiconductors and pharma.
We're doing it because we want to make our own drugs. We're doing it because we want to make our own steel and aluminum, lumber, other things.
We'll bring you more on the White House tariff strategy and its economic impact this hour with two important conversations. Part of Bloomberg's Annmarie Hordern sit down with Treasury Secretary Scott Bessent and my live interview with former Treasury Secretary Janet Yellen. Plus, our political panel will be here as we follow two more stories today. The president of El Salvador saying a deported Maryland man will not be returned to the U.S. as he visits Trump at the White House, and Harvard rejecting a proposed agreement with the Trump administration. Thanks for joining us on this Monday. We begin in Buenos Aires, where earlier this afternoon, Bloomberg's Annmarie Hordern spoke with the Treasury Secretary Scott Bessent in an exclusive interview just after he met with the Argentinian President Javier Milei and the country's economy minister. And Annmarie is joining us now from Argentina with more. Annmarie, certainly no shortage of things to discuss with Secretary Bessent.
Absolutely not. Good evening, Kaylee. So one thing is clear. He came here really to show support for Javier Milei at the start of this new IMF loan, $20 billion, $12 billion of which will be delivered to the country to use tomorrow. So this is really a show of support from the United States. But of course, this comes at a time that we've seen tons of gyrations and unnerving in the markets when it comes to the administration's trade policy. And when it comes to that, what the secretary said to me was this was only one pillar of the president's three-legged stool. You still have to consider tax cuts, deregulation, and part of tariffs. And when it comes to the trade agreements, he says those conversations are starting to speed up. This week, he's going to be sitting down with the Japanese negotiators, next week, South Korea, and of course, accompanying his conversations with Javier Milei. Take a listen to our exclusive sit-down.
The reason for being here today is today's a fulcrum day. So the Milei administration has done three adjustments, and this marks the beginning of the third one. So they did a large fiscal adjustment, a large monetary adjustment, and they're doing they announced on Friday a large currency adjustment. IMF has allocated $20 billion to them. The World Bank has allocated $12 billion, and I wanted to come here today to show support for President Milei and his commitment to what I think is historic in terms of bringing Argentina back from the precipice.
When it comes to the trade negotiations, I'm sure you spoke with President Milei about the 10% rate that Argentina was hit with. Do you think at some point that can come down to zero?
Look, I think we're going to start the negotiations, and just like with everyone else, I'm telling them, bring your A game. We'll see what you got, and we'll go from there.
Can any country go to zero?
We'll see. I don't know what's going to happen with the negotiations because we've got a whole box of things we've got to overcome: tariff, non-tariff trade barriers, currency manipulation, and subsidization of labor and facilities. So there's a big menu there.
There's been an early focus on Latin America writ large from the Trump administration in the first 100 days. Is Latin America policy also, in a sense, China policy for this administration?
Well, I think that might be a good description, because what we are trying to keep from happening is what has happened on the African continent, where China has signed a number of these kind of rapacious deals marked as aid, where they are really, they've taken mineral rights, they've added huge amounts of debt, onto these countries' balance sheets. It's undisclosed to any of the other international organizations. They've got tolling arrangements. So they're guaranteeing that future generations are going to be the poor and without resources. And we don't want that to happen any more than it already has in Latin America.
China has a foreign exchange swap with Argentina. Would you consider a credit line directly from the United States?
That's not under consideration in terms of, so they have an $18 billion credit swap in RMB. Argentina, under the previous Peronist government, drew down $5 billion, and that will remain outstanding. The Chinese showed very good faith effort after the announcement, or in conjunction with the IMF announcement, so that is going to be rolled forward for a year. But
do you want them to get rid of that swap with Beijing?
Well, I think as this administration continues their stay the course on their economic policies, they should eventually have enough foreign exchange inflows to be able to pay that off.
So less than 2 weeks ago, you and I were talking outside of the White House after what the president called Liberation Day, and you said you weren't part of the negotiations. Now you're leading them. What's changed in these past 12 days?
No. What I said was I didn't construct the actual
tariff rates.
The tariff rates. I've always been part of the tariff policy. I had been focusing on tax. Maybe you want to talk about that later. That's going very well. And now with the trade negotiations, I'm going to be part of that. And the president has hit a 90-day pause button, and we are moving quickly with many of our most important trading partners. So we had Vietnam in last week. We had Japanese in on Wednesday, South Korea next week. So it's going to move fast. And but the important thing for your viewers to know is we're setting up a process, and we are going to run that process. It's going to be orderly. And at the end of the day, especially for the most important trading partners, the president's going to be involved. So
when it comes to the current negotiations this week, you're also sitting down again with the Spanish negotiating team, the Japanese negotiating team, and also the Spanish economy minister? Well, the Spanish economics minister was just a prearranged meeting. He and I have never met. So that is not a trade sit-down. The Japanese meeting is a trade negotiation. The Japanese prime minister recently said he's not going to rush to get a compromise and a negotiation. How quickly do you think you can see these deals come to fruition? Well, again, I think there will be advantage to our allies, especially in a first mover advantage. Usually the first person who makes the deal gets the best deal. So who do you think will be first? It's their choice. Is there a handful of countries that you expect to have a deal before the 90 days is up? Oh, I think there could be numerous countries. And look, it may not be the actual trade document, but we will have an agreement in principle and be able to move forward from there. So are we talking about a dozen or 70 plus? Look, I think it's going to depend, but we're going to move with all deliberate speed. And again, it's going to be a process. It's going to be USTR, who just has mountains of data that they've been collecting over the years, because in a funny way, the tariffs are the easiest part. Treasury Secretary Scott Bessent, Kayleigh, sitting down with me just an hour or so ago. Really what he was talking about there when it comes to trade, which the market has been fixated on, is that a process will now be in place, some meetings to keep an eye on as he leaves Buenos Aires and goes back to Washington, D.C. The Japanese negotiators will be in town. Next week, he says he's sitting down with South Korea. These are really important metrics to watch, as he says that a number of these countries can get deals done before the 90 days.
Well, Annmarie, as you mentioned that the markets are fixated on this, that manifested in the markets at least last week in the massive selling pressure in the Treasury market and in the U.S. dollar. But the Treasury Secretary didn't seem too concerned about that.
Not at all. He basically reiterated what President Trump said, which was be cool. And he's not looking at just what happened 1 week on to see if there was destabilization in the market. But what we saw in the 10-year yield, which is 50 basis points higher, the U.S. dollar weakening close to 3%. There is this concern of our people around the world, investors in the United States, dumping U.S. assets. He didn't seem to think at all that the U.S. would lose its reserve currency status. He said it is still U.S. policy for the dollar to be the reserve currency in the world. And when I asked him directly about who is dumping U.S. assets, these treasuries, he doesn't see it to be sovereigns. He doesn't think it's nations. There's a lot of market chatter that maybe it's Japan or Beijing dumping U.S. treasuries. So it looks like maybe it's just hedge funds unwinding. But at the moment, Kayleigh, the sense I got from the Treasury Secretary, as I did 12 days ago, was nothing to see here right now when it comes to what's going on in financial markets.
All right, Bloomberg's Annmarie Hordern, great interview. Thank you so much. And of course, you can find the full conversation between Annmarie and Treasury Secretary Scott Bessent online or on the terminal. And later this hour, his predecessor, former Treasury Secretary Janet Yellen, will join us with her reaction to Bessent's comments and the Trump administration's tariff strategy overall. But first, President Trump met with the Salvadorian president today in the Oval Office amid Bukele's assistance in the Trump administration's crackdown on migrants and their deportations. We'll bring you the details of the meeting next on Balance of Power on Bloomberg TV and radio.
We appreciate working with you because you want to stop crime, and so do we. And it's very, very effective.
We're very eager to help. We know that you have a crime problem, a terrorism problem that you need help with. And we're a small country, but if we can help, we will do it.
President Trump, alongside Salvadorian President Nayib Bukele earlier today at the White House, praising him for his help in aiding the administration's migrant crackdown and, of course, accepting those that the U.S. is deporting from this country. And joining us now for the latest on that meeting here on Bloomberg TV and radio is Bloomberg's Jen Dlouhy. So, Jen, obviously they are working together. We have seen hundreds of migrants sent down to that prison in El Salvador, but much has been focused on one man in particular, a Maryland man, Abrego Garcia, who the Supreme Court said the administration must facilitate the return of after he was deported, admittedly accidentally, but no signal from either side that they are going to be the ones to facilitate that return.
Right. And in fact, what we learned today was that the president of El Salvador says he's not bringing him back. He's not going to smuggle him into the U.S. He called a question about whether he would crazy from reporters. And you know, there's a hearing on this matter tomorrow. But at this point, it doesn't look like any moves to bring him back. Certainly wasn't on the plane with the president today.
Yeah. And the Attorney General, Pam Bondi, says it's up to El Salvador. So if El Salvador doesn't want to, I guess that leaves a lot of questions. Meantime, the President Trump himself, that is, faced a lot of questions about tariffs while these two were sitting in the Oval. Questions, obviously, around exemptions, given the list that was published over the weekend. Then he floated exemptions on autos, but signaled that more tariffs are coming. Where exactly do we stand as of now, Jen?
Well, we are looking at potentially some exemptions coming on auto parts. The president's answer was vague, but he indicated that he was sympathetic to what he's hearing from auto executives about the challenge of really reshoring their entire supply chains to North America, if not the U.S. itself. And so really that was concentrated on auto parts. This, of course, as you noted, following that Saturday or that Friday night decision to expand essentially the semiconductor exception to include, you know, cell phones and smartphones. We also recently have just gotten some news on the initiation of individual investigations into new tariffs that would hit potentially semiconductors and pharmaceuticals.
And just quickly, how quickly could that actually translate into a tariff being announced?
For those probes, I mean, typically it takes 270 days. It's typically 9 months. The administration and many administration officials have said these things will happen quickly. They call it Trump time. We could see it unfolding in the space of 2-3 months, really. Yeah,
not sure how much is really typical in this administration. Bloomberg's Jen Dlouhy, thank you so much. Now, today in the Oval Office, President Trump also responded to recent criticism of his economic strategy and pointed to the markets.
And even the stock market's up today. You get a little hit because people didn't understand the power of our country economically if you use it right.
Of course, Wall Street faced this burst of tariff headlines today, and Romaine Bostick is joining us from New York to break down how exactly the markets reacted. Romaine, at least there was green on the screen, though it didn't necessarily end the way it started.
Yeah, I mean, it was a lot of volatility in between, Kelly, and I think to Trump's point, you did have some optimism coming into today. In fact, you saw a pretty big rally to start the day, but then around midday, you had two things transpire. The first was you had some data out of the New York Fed that seemed to suggest that expectations among households in the U.S. had deteriorated for their own financial conditions. At the same time, Trump kept talking about tariffs, whether they would be on, whether they won't be on, what exemptions would be made. You saw that really played out with a lot of the automotive companies, not just the automakers, but particularly the parts companies like Autolife and a few others. This idea here that if they do get a reprieve, this would mean, of course, much more of a lifeline for these stocks to continue rallying. But the question is, do you believe that long term? Do you believe that if there is a reprieve, that it will stay there? And that's where you saw the volatility in some of those stocks. You saw it similarly played out in the Philadelphia Semiconductor Index, which you were just talking about there. Came into the day with a lot of optimism, but then once Trump started talking about this idea of potential tariffs in that space, and then, of course, post-market, once we got confirmation of that 232 process, you started to see some weakness in that area as well. The Mag 7 did basically nothing on the day. Apple did manage to finish the day in the green, up by a couple of percentage points, Kaylee, but once again, the stock had rallied a lot more than that. And the question is, where is the conviction? I do just want to point out two quick things, Kaylee. First of all, we should point out volume is relatively light compared to what we saw last week. For all intents and purposes, this is a holiday week. Passover started on Sunday. You have Good Friday and Easter coming up in the weekend ahead. So there are a lot of people in between that are just not at their trading desks, and that's going to skew a lot of the price action that we get in this market as we move forward over the next few days, Kaylee.
Yeah, it's spring break for a lot of people.
Yes.
Good point. Bloomberg's Romaine Bostick.
We're still here.
Thank you.
Yeah.
Yep. We're still having to work each and every day, and the work continues coming up as we'll continue the conversation on how markets are reacting to this shifting tariff policy from the Trump administration. David Bahnsen, founder and managing partner of the Bahnsen Group, joins next on Balance of Power on Bloomberg TV and radio.
I'm a very flexible person. I don't change my mind, but I'm flexible. And you have to be. You just can't have a wall and you'll only go. No, sometimes you have to go around it, under it, or above it. I helped Tim Cook recently and that whole business. I don't want to hurt anybody. But the end result is we're going to get to the position of greatness for our country.
President Trump in the Oval Office earlier today when asked about potential tariff exemptions for things like Apple products from the semiconductor levies that he says are coming in the not so distant future, even while consumer electronics are being granted a reprieve for now, which granted a bit of a reprieve to financial markets today in return. And for more on that, joining me now on Bloomberg TV and radio is David Bahnsen, founder and managing partner of the Bahnsen Group. David, thank you for being here. Obviously, we've seen some incredible bouts of volatility over the last week or more. Do you see talk of exemptions or flexibility as putting that volatility to bed for now?
No, I don't, because I think it exacerbates volatility longer term when there's more unpredictability. Now, what we mean by controlling volatility is that we get some up days in the market. Then I think it will do that because obviously markets want to believe that there's more and more carve-outs, exemptions, waivers. In other words, that there's less taxation, that there's less impediment to trade. But that doesn't neuter the volatility in the sense that there's an unpredictability driving a lot of the up and down movements in equity, fixed income, and currency markets.
Well, if we can focus on the equity market, I do want to get your take on fixed income as well. I wonder how much volatility is going to be exacerbated by the fact that we're now in the midst of earnings season as well. David, realistically, the backward look at the quarter they're reporting is one thing. The forward look, trying to provide guidance, is another. Do you realistically think any company is going to be able to do that? And what are we likely to hear?
Some are more able to do it than others, but you're certainly right that there is a general sense in which forward guidance is going to be very skewed and in some cases not offered at all. We've already had some companies announce that they can't offer forward guidance. You know, there are some companies that are less import-export driven than others, but either way, I think forward guidance is right now going to be very cloudy. And that also adds to volatility, which I think is your point. So there's a lot of issues that make it difficult to get a read on forward earnings. And we always have to remember that's what stock markets are, is a discounting into the present of forward earnings. When that gets cloudy, the whole picture for stock prices gets cloudy.
So within that kind of cloudy, murky picture, David, is there an area within equities that you still feel safe being right now?
Well, most areas of equities I feel safe being because I view equities as an asset class I want to own for the long term. So cloudiness, murkiness, short-term volatility, up, down announcements from administration, those all have to be baked into one's asset allocation. We're dividend growth investors at my firm. We have a complete confidence in the sustainability of growing dividends from the companies we own. And so that gives us an underlying confidence. Now, that's different than saying that I don't expect there to be price volatility. I think there will be, particularly with more economically sensitive and cyclical stocks. Financials and energy, we know of the issues in technology, communications, but then you see some of the issues like in defensive sectors. Today, the bond proxies, real estate, utilities did very well. I think healthcare is much less sensitive to this and consumer staples as well.
Well, you talk about the bond proxies. Let's talk about treasuries themselves, which you alluded to earlier. After a 50 basis point move to the upside on the 10-year last week, we come back down another 12 basis points today. What exactly do you see happening here, David? Do you subscribe to the theory that there's some government out there that's actually dumping these assets?
No, and in fact, I think it's rather obvious that there's not. And so the way this is played out required a few different stages of understanding. There was a deleveraging that Secretary Bessent referred to. That was clear as could be for any of us who are inside the market, that at the peak 4-day sell-off after April 2nd, there was delevering. You saw it even in some of the safer sectors of the market, of the equity market. But then I do believe that the basis trade and some of the hedge funds unwinding a lot of the leverage they've extended to people in the futures market, the hedge funds being on the cash market side, added to some disruption. But it would be totally counter China's intentions and objectives to strengthen their currency in this moment, which is what selling U.S. Treasuries would do. We have $36 trillion in national debt. China owns $1 trillion of it soaking wet. Japan's right around the same. Canada's a tiny drop of that. So I don't believe it's foreign unwinding. And we have to remember, when you say 50 basis points, we hit 390 for about 5 minutes a week and a half ago. We had been at 440 the week before that. So we really just sort of round tripped on bond yields. It's volatile, but no, I don't see any signs at all of foreign unwinding.
All right, David Bahnsen, founder and managing partner of the Bahnsen Group. Thank you so much for joining us. And still ahead, another important conversation on the impact of tariff policy. Former Treasury Secretary and former Fed Chair Janet Yellen joins me live next on Balance of Power on Bloomberg TV and radio.
These are maximum rates, so you ask if it was a maximal strategy. If you don't elevate, this is your maximum rate, so don't elevate. You have, in markets, the upside barrier. You don't have unlimited risk, and then come to us, and we will negotiate in good faith.
That was current Treasury Secretary Scott Bessent earlier today on Bloomberg discussing the Trump administration's tariff strategy. And now we get the view from his predecessor. Former Treasury Secretary and former Fed Chair Janet Yellen is joining me live on Bloomberg TV and radio. Madam Secretary, thank you for being here on Balance of Power. I wonder your take on whether these negotiations, a 90-day pause for reciprocal tariffs that has been implemented to facilitate them, conversation around exemptions for certain products at the very least. Are those things positive because it indicates the administration is trying to put a finer point, calibrate its tariff policy, or do they actually just sow confusion and potentially cause more harm than good?
Well, frankly, I think the entire policy has been misguided. The objectives unclear, the rationale for the tariffs that have been announced really unclear and not at all sensible. steps toward removing the tariffs, lowering them, are positive, but we're in a world of tremendous uncertainty. I have no idea what will happen with these negotiations. The announcement about reciprocal tariffs indicated huge tariffs on some countries like Vietnam or the European Union based on bilateral deficits in trade, which is in no way a measure or indicative of unfair trade practices. It was suggested that these reciprocal tariffs are in response to unfair trade practices. That clearly wasn't the case. And for example, with the European Union, the trade barriers are very, very low. So I must say I'm confused about what the Trump administration will be looking for with Vietnam, for example. We actively encouraged Vietnam to begin to produce goods that we were dependent on China for national security purposes. We wanted diversification of supply chains. I don't think there was anything unanticipated or inappropriate about having a trade deficit with Vietnam. I find it very difficult to know what the Trump administration will be looking for or expecting.
Well, and of course, China's Xi Jinping himself was discussing trade with Vietnam today. On the subject of Xi and of the Chinese government, which, of course, you had many conversations with over your tenure as Treasury Secretary, you made tracks to Beijing yourself. Given your interactions with China and the way in which they have responded to the tariffs the administration has levied on Chinese imports, do you see them as willing to come to the table on this one, or are we stuck in a dangerous game of chicken?
Well, I think they've made clear that they would like to de-escalate this conflict and remove their own trade barriers, the retaliation they've announced, and see our trade barriers come down as well. I think they're tremendously damaging. They're at levels that are almost prohibitive of trade, and I think it would be beneficial for both sides. I will say in the case of China, and I've made this clear during my own visits there, we have legitimate grievances with some of the policies that China has followed to massively subsidize its export sector, its manufacturing sector, particularly advanced manufacturing, and its overall macroeconomic strategy, which places unusually low emphasis on consumer spending as a source of demand and really relies on flooding the world with Chinese goods. I think this is legitimately damaging to the U.S. economy and something that we were discussing, and I think there should be dialogue and an attempt by the Trump administration to pursue this issue. Working together with our allies, I think, would have been a desirable approach. It's one that we were committed to. But now the Trump administration has really engaged in some very antagonistic initiatives relative to our closest allies, and that looks like a less promising approach than I would have hoped.
Well, and you, Madam Secretary, together with the Biden administration more largely, were very deliberate in saying that the goal was not decoupling from China. Is that actually, though, what is going to be the effect of these policies, a decoupling?
Well, if tariffs at this level remain in place, it seems to me it must produce decoupling. And I regard that as very undesirable. I think the tariffs that we've placed on China are going to impose very significant burdens on American households. Now, of course, things are changing by the day. there's at least a temporary reprieve on auto parts that we learned about today. But reasonable, estimates of the impact on the average American household of these tariffs, the whole program, but especially China, is around $4,000 per household. This isn't good, and most of these goods we can't produce in the United States, or if we were able to do so, it would take years to shift production. And, unfortunately, with the uncertainty that surrounds these policies, I think most businesses are in a situation where they must feel paralyzed. You don't know if it makes any sense to cease production in China and to move it to the United States. And unfortunately, some of our closest allies no longer believe commitments that we make are good and will remain in force. So if I were a business thinking about coming to the United States to get behind the tariff walls, I wouldn't feel confident that when my factory came online several years down the road, that the tariffs would still be there.
I want to return to your point on the impact on American households and how this is already filtering into the soft data as we've seen consumer confidence deteriorating, consumer inflation expectations picking up. How quickly do you think that can actually translate into the hard data? And do you expect the hard data is going to start sending recessionary signals?
I think that's entirely possible, and it's something that I and others in the Fed will be watching very closely. I really haven't seen anything in the hard data that suggests a significant decline in either consumer or business spending. But there are very good reasons, as you mentioned, the soft data, the surveys. An overwhelming fraction of American households expect prices to rise at a time they're already tremendously upset about the high cost of living. And objective estimates, as I said, suggest that the tariffs will burden the average household by thousands of dollars a year, with particular harm to the lowest income households that their consumer baskets are tilted toward imports. So we could see a significant decline in consumer spending. Inflation expectations have gone up. They know that's going to happen. And business investment in this type of environment, I would really expect it to decline. We would be lucky to skirt a recession. And I would expect some indications in the hard data soon.
Well, and with your former Fed chair hat on, would you expect that that is what the Fed would react to, the side of the dual mandate that pays more attention to growth? Or if this is coming in tandem with inflationary pressures and rising costs, they can't theoretically respond to both at the same time.
Well, it is a very difficult conflict situation. The Fed has two goals, both of which are important: price stability and maximum employment. So, of course, if the Fed sees a weakening in the economy, the unemployment is rising, we've fallen into a recession, that will create a good reason, motivation to cut rates. But whether or not they'll feel comfortable doing so depends on what happens on the inflation side. Now, in principle, if tariffs rise and then stop rising, that should have an impact on a one-shot basis on the price level, and arguably should not permanently increase inflation after prices have moved up to reflect the tariffs. But you've seen inflation expectations move up in the data. We've been through a period in which there was a lot of inflation. Inflation's come down, but it's not quite down to the Fed's target, even before we see any impact of the tariffs. And you can't have second-round effects. So if households and workers start trying to bargain for higher wages to offset the hit from the tariff price level increases, this can create an ongoing inflation problem, and the Fed will be sensitive to that too. And that pushes policy in the other direction. Yeah. So I think watching very carefully what happens and acting on the basis of data both on inflation and the labor market will be what the Fed is doing.
Well, what about the Fed reacting or responding to the bond market? I wonder if we came close to the precipice of needing Fed intervention in the activity we were observing last week, Madam Secretary. And frankly, do you think that that kind of confidence signal that the Treasury market and currency markets were sending for to that extent with the weakness in the U.S. dollar is sending a justified signal about the viability of U.S. assets as safe havens?
Well, it did seem to me that the markets, both the currency markets and the bond market, were sending a signal that there's a loss of confidence in U.S. economic policy and even perhaps the safety of Treasury securities, which are the bedrock of and the safest asset on the planet. And this was a very disturbing combination of developments. Normally, when there's turmoil in the markets, you see longer-term Treasury yields going down because Treasuries are a safe haven and people sell risky assets and buy Treasuries. And we didn't see that, of course. Treasury yields shot up last week, about the most we have seen in many, many years, I think over a decade. And normally, if interest rates go up in the United States, you also see the currency strengthen. And we didn't see that. We saw the dollar weaken. And that is suggestive of a flight from dollar assets, reflecting a loss of confidence. Now, the Fed wouldn't respond directly to that unless what we were to see were signs of real financial instability, liquidity drying up in financial markets, in the Treasury market, a self-perpetuating deleveraging that could become very dangerous. And I don't believe we've seen that. The 10 and 30-year auctions last week of Treasuries were successful. Markets are, by and large, functioning normally. So I don't see that happening now. Things do remain volatile. If real financial stability concerns were to arise, I believe the Fed would think about using its liquidity facilities as it did at the beginning of the pandemic. But we're not at that point yet.
And finally, Madam Secretary, before we let you go, tomorrow is tax day. And knowing that there is a fight to raise the debt ceiling that is still in front of us, I know you can't see the receipts at the Treasury any longer, but you have had to oversee the extraordinary measures the Treasury has to conduct to keep things going in the interim before the debt ceiling is raised. How easily could the X date be pulled forward if receipts come in late? Do you expect that?
Well, that is always a very significant factor, and it certainly was a factor for us in 2023 when the debt ceiling was raised, that there was a weakness in receipts. And I am worried about that. I think the economy remains strong. There's been a lot of turmoil at the IRS, people who work in enforcement having been cut. It is a factor that could affect the timing of when the debt ceiling really hits.
All right, we'll leave it there. Thank you so much for your time. Janet Yellen, the former Treasury Secretary under the Biden administration, also former chair of the Federal Reserve. We much appreciate it. And coming up, El Salvadorian President Bukele says a Maryland man deported to his country by the Trump administration accidentally would not be returned to the U.S. even after the Supreme Court called for the administration to facilitate his release. We'll discuss that with our political panel next on Balance of Power on Bloomberg TV and radio.
How can I return him to the United States? Like I smuggle him into the United States, or what do I do? Of course, I'm not going to do it. It's like, the question is preposterous. How can I smuggle a terrorist into the United States? I don't have the power to return him to the United States.
El Salvador's President Nayib Bukele today in the Oval Office, responding to whether he would return a Maryland man who was wrongly deported to El Salvador by the Trump administration, which the Supreme Court ruled last week must facilitate his release. Joining me now for more is this evening's political panel here on Bloomberg TV and radio. Bloomberg Politics contributors Rick Davis, Stonecourt Capital partner and Republican strategist, alongside Democratic analyst Jeannie Sheehan Zaino, senior democracy fellow at the Center for the Study of the Presidency and Congress. Jeannie, we heard in the Oval Office today that despite the ruling of the Supreme Court, the administration thinks it's up to El Salvador to decide whether or not to return Kilmar Abrego Garcia. Doesn't seem like El Salvador is interested in doing that. So where does this go from here?
Yeah, it's like the finger pointing. You do it, and nobody is going to do it. The reality is El Salvador is a contractor of the United States. They accepted $6 million to take these folks, and certainly they can send somebody back. But the point is the administration doesn't want him back, and the Supreme Court, unfortunately, with that decision, left this open. And that's why Stephen Miller was just about celebrating that 9-0 decision, because they left a big gaping hole in that decision saying facilitate, as you just said, and don't interfere with foreign policy. So what we're hearing the DOJ and the administration say, this is foreign policy. It's up to the foreign nation. Of course, we've contracted with them to take these folks. They could easily send him back.
So is this an instance of defying the decision of a court, or just an interpretation problem, Rick?
Yeah, I think, to be generous, I think they're interpreting it the way they want to. And there maybe is a little defiance in that, too, because I don't think it's outside the realm of possibility that part of what this administration is trying to do is test out new executive authority through the courts. And so if the courts gives them a window to walk through, they're going to walk through it. I mean, the dozens and dozens of court cases on various policies that have been enacted since Donald Trump's been president is a part of the process of them collecting up more executive authority. And this is no exception to that. A court can't tell them how to conduct foreign policy. And in this case, even though it looks like they've pulled somebody out of a household in the United States, married to a U.S. citizen, with a kid who's a U.S. citizen, and dragged off without any due process to El Salvador. El Salvador national, now in the hands of the El Salvadorian authorities, and it doesn't sound like the head of state, Bukele, wants to get rid of him. And so it's really up to them. It's a trap we laid for ourselves, but I think it's a way that this administration is throwing elbows to the judiciary.
Well, they're throwing elbows to a lot of institutions, not just the judiciary, Jeannie, but we've obviously seen some spats with higher education institutions, including an agreement that was made with Columbia. An agreement, though, we learned today, not made with Harvard, despite the threat of pulling $9 billion in federal funding. Harvard University refusing to accept a deal with the administration. Will they be the first of many, or could the administration make a negative example out of them?
You know, I think the administration will try. If anybody can push back on this, it's going to be Harvard, of course, the wealthiest, probably the best, one of the best institutions in America and the world. And the reality is that Harvard is saying, we will comply with all valid laws, and they're looking at Title VI. Their problem is this push to curtail how Harvard admits students, what faculty teaches, is a violation of the law. And so, you know, if the administration wants to change the law, they're saying they need to go through Congress, have that passed and signed. They haven't done that. What we're seeing is what we're also seeing in other spaces, to Rick's point about this aggrandizement of executive authority, is the president trying to push these things through via executive order. So hopefully other institutions can follow suit. It is not easy to do that. These institutions, even wealthy ones like Harvard, they really need federal funding to do the great work that they do. And by the way, we are all worse off if the federal government isn't helping to support the work that they are doing at these institutions in terms of research and the support of the liberal arts and the humanities and the sciences.
I wonder, Rick, what you view these higher educational spats as being really about, because obviously a lot of this emanated from the pro-Palestinian protests we saw on many of these campuses, like Columbia, that's led to the revocation of visas of students who were involved as well. Is it really centered on an anti-Semitism kind of thing, or is this just about being able to exert control to the point that you were making earlier?
Probably both. There's no question that what put Harvard, Penn, Columbia on the map in this administration was the ham-handed way they reacted to the summer of last year's protests on their campus regarding Palestine. And so you've got to chalk that up to being on their campus, their fault. Nobody else made that happen. They reacted poorly to it. They came to Washington. They testified. They did a horrible job. Many of them wound up having to many of the presidents had to resign from that. So, yeah, they stubbed their toe on the way to this process. But in addition to that, I'd say there's a very big political theme playing out here, and that is, why does Harvard need $9 billion of taxpayer money, right? I mean, like, there's probably a lot of wonderful things that are happening for society, for our health, that are embedded in that $9 billion grants. But Harvard, as Jeannie said, the probably wealthiest university in America, a private school, you know, in the Ivy League, is now got $9 billion of funding from the federal government. I mean, you really got to scratch your head and say, where's the symmetry to that? And every day we say that, $9 billion Harvard University, it's a good political day for this administration.
All right. Rick Davis and Jeannie Shanzano, our political panel on this Monday. Thank you so much. And as we keep track of the latest from this administration, we also got some news on Mexico specifically. The U.S. will be instituting a 21% tariff on Mexican tomatoes starting July 14th, and that allowing the termination of the agreement on tomatoes. So just another tariff headline we have to keep track of, as we always do here in Washington. And you can always find coverage of the latest tariff twists and turns in the Washington Edition newsletter, on the terminal, or online. Joe Matthew will be back tomorrow, so we'll see you then. Same time, same place, right here on Balance of Power on Bloomberg TV and radio.